The year is 274 AD. You are standing in the mud of a marketplace in Gaul. You are a legionnaire. You have marched 2,000 miles for the empire. Today is payday. The paymaster drops a silver denarius into your palm. It's cold, heavy. But something feels wrong. You rub the surface with your thumb. Beneath the shine of the emperor's face, a dull, reddish copper begins to bleed through. You walk to the bread merchant. You place the coin on the counter. He doesn't look at you. He looks at the coin. He shakes his head. 3, he says. Last week, the price was 1. You feel a spike of panic in your chest. Not because you are poor, but because you've been cheated. The empire didn't lower your wage. They didn't raise your taxes. They did something much more subtle. They changed the math. They stole the silver from your pocket and left you holding a slug of copper. You think this is ancient history? Look at the receipt in your wallet right now. Rome didn't fall because of barbarians. It fell because of what is happening to you today. Welcome to the silent tax. To understand why your grocery bill is doubling, you have to understand the Roman denarius. For centuries, this coin was the standard. It was 95% pure silver. It was trust, solidified. If you held a denarius in 50 AD, you knew exactly what you owned. It was a store of energy. But empires are expensive. Soldiers need wages, roads need repairs, politicians need parties. And eventually, the expenses outweigh the income. The math stops working. Now an emperor has 2 choices. Choice A, raise taxes. This is honest, but it is dangerous. If you take too much tax, the people riot. They march on the palace. So they choose choice B, the coward's choice. Debasement. Nero was the first. He thought, what if we just melt the coins down? We take 100 silver coins, we mix in some cheap copper, and we mint 110 new coins. It seems like magic. He created free money, he paid his debts. The soldiers were happy, but this kicked off a feedback loop that destroyed the world. By the time of Marcus Aurelius, the silver content dropped to 75%. By the time of Gallienus, 5%. By 270 AD, the money was 0.02% silver. It was painted bronze. It was a lie. Here is the terrifying part. The people didn't notice immediately. This is called money illusion. You see the same face on the coin. You see the same name. You assume it has the same value, but value is finite. If you double the number of coins, you halve the value of every coin in existence. It is a transfer of wealth, from the saver to the printer. And the saver is usually the last one to realize they've been robbed. So what happens when the illusion breaks? Panic. Merchants aren't stupid. They realize the coins are trash, so they ask for more of them. Wheat prices skyrocket. A loaf of bread goes from 2 drachmas to 200. The Emperor Diocletian watches this chaos. He doesn't blame the printing. He blames the shopkeepers. In 301 AD, he issues the Edict on Maximum Prices. This is one of the most important documents in history. He lists thousands of items, boots, lions for the arena, beer, wheat. He sets a fixed price for each. And the penalty for charging more? Capital punishment. Death. Total liquidation of your family line. Diocletian tried to fight mathematics with violence. Do you think it worked? Of course not. The historian Lactantius wrote, "Much blood was shed, and nothing appeared for sale." When you price fix reality, the goods vanish. The shelves go empty. Does this sound familiar? Empty shelves? Supply chain issues? Greedy corporations blamed for rising costs? It is the same script, only the actors have changed. The Roman economy went dark. People stopped using coins entirely. They went back to barter. A complex society collapsed into a primitive one, not because of war, but because the medium of exchange failed. Trust is the only currency that matters. Once it is gone, no amount of force can bring it back. The rich, the senators, the insiders. They knew. They dumped their denarii for gold, for land, for slaves. The poor, they held the coins. They believed the stamp, and they were wiped out. This is the iron law of inflation. It is a tax on the uninformed. It is a tax on those who trust the state. But here is the terrifying pivot. Rome had to physically melt coins. It was slow. It was messy. Today, they don't need a furnace. They just need a keyboard. The speed of the theft has increased. which means the speed of the collapse will too. We are not watching a slow decline. We are watching a high-speed collision. And just like the Roman legionnaire in the mud, you are standing there, holding a currency that is melting in your hand. When the money dies, the city dies. This is what historians often miss. Rome didn't just get expensive, it got dangerous, it got hollow. Because the currency was worthless, trade broke down. Grain shipments from Egypt stopped arriving. The division of labor evaporated. You couldn't be a specialist anymore. If you were a poet, or a lawyer, or a clerk, you starved. You had to become a farmer to survive. People fled the cities. They moved to the countryside, to the great estates of the wealthy. They traded their freedom for protection and food. This was the birth of feudalism. The Dark Ages weren't just a loss of technology. They were a retreat from a broken financial system. Now, look at our world. Look at the Great Resignation. Look at quiet quitting. Why work for a currency that buys less every year? Why participate in a game that is rigged? We are seeing the early stages of that same retreat. A withdrawal of effort, a withdrawal of faith. The hyper-specialized economy we live in, where you can be a digital marketing consultant, only exists because of sound money. If the money breaks, the complexity breaks. And we are left with only what is real: food, energy, shelter, protection. Everything else is just noise. Rome shows us that inflation is not just an economic annoyance, it is a civilizational solvent. It dissolves the glue that holds us together. So, the question remains, if the cycle is inevitable, what do? You stop thinking in terms of currency. You start thinking in terms of utility. The Romans who survived didn't hold denarii. They held land, they held gold, they held tools. They minimized their counterparty risk. Counterparty risk is simply the risk that the other guy, the bank, the emperor, the government, won't keep their promise. In a debasement cycle, the risk is 100%. They will break the promise they have to. Your savings account is not money. It is an unsecured loan to a bank that is legally allowed to gamble with it. Real wealth cannot be printed. It cannot be diluted by a decree from the Senate. Al-Ghazali said that money is a mirror. It has no value of its own. It only reflects value. When the mirror cracks, you need to own the object, not the reflection. This is your briefing. The silent tax is being levied right now. Every hour you work, a percentage is siphoned off by the printer. You cannot stop the machine. The empire always chooses to debase. But you can step out of the blast zone. You can convert the fake into the real. History is not a tragedy for everyone. For those who prepare, it is the greatest opportunity of a lifetime. The legionnaire in 274 AD had no way of knowing what was coming. You do. You have the map. The question is, will you use it, or will you keep trusting the face on the coin? I want to hear from you in the comments. Do you think we are past the point of no return, like Rome in the 3rd century? Or can the system be fixed? If you want to understand the future, hit subscribe. History leaves a fortune behind. I'll help you claim it.